Hey, fellow listeners, fellow audience, fellow taxpayers, fellow followers. Welcome, welcome, welcome. My name is Jada Thompson. I am a thought leader in the accounting industry, and I'm here to share a awesome recap of my series of tax preparation basics. And with saying that, I want to make sure that you know where to find me. You've obviously have chimed in into my video today. If you will go ahead and hit subscribe, follow, like to this video, along with visiting my Instagram and Facebook at Just Ask Yara, or you can visit my website at askyara.com. Now, today's topic is basically we're going to recap everything and get you set up to what tax planning is going to look like for you. So, with that being said, we covered a few things in our previous recordings. The first one was just basic 101 on the 1040, what the tax requirements are for tax returns. Then we broke that down a little bit. We went into some Schedule C details for different entrepreneurs in different industries. And then we dived in a little bit more on some of the additional items such as crypto and investments. Now, today we're going to just recap everything in its entirety. And with saying that, that recap means this is action items for you, my listeners, right? So, whether you're self employed, a small business owner, or you just want to stay ahead with your taxes, right? Your year end tax planning is a stress-free filing if you do the following. So we're going to dive into three essential areas today. Those areas are going to be quarterly estimated taxes, your record keeping, and maximizing business deductions. So with that being said, let's go ahead and get started, right? So remember our three topics today: quarterly estimated taxes, record keeping, and maximizing your business deductions if you're a business owner. So, quarterly estimated taxes, we can start there. With that, what you expect to do with quarterly estimated taxes is if you're a small business owner or an independent contractor, some of us are known as freelancers, um, you're self employed and the IRS expects you to pay as your income comes in. Expectation. However, this expectation can be either predictable or unknown. Predictable means utilize the estimated tax payment process. Unknown means I'm going to take the hit at the end of the year. So, with that being said, you're going to have to make sure that as you're reaching the planning phase of your taxation or tax return filing. So that means I'm in 2024. I'm about to file my 2024 taxes. I know how much, what my bottom line is. I owe the government $3,000. Of that $3,000, however, I want to make sure that I don't have to pay this in a lump sum for the upcoming projected year penalty that or liability that I'll have to. So that we convert that into 4 equal payments to the IRS named estimated taxes. Those payments are done quarterly intentionally because that lump sum payment can cause a financial burden at the end of the year. Whereas if you do those estimated taxes, you will literally allocate that amount of money from your projected revenue that you're on a steady pace of receiving. You'll know every quarter that that's the amount of money allocated to pay the IRS. Well, so to calculate your estimated taxes, I'm going to give you a few tips here. So you consider your expected income. You're going to also consider your deductions. So when you divide what you owe into 4 payments, those typically help you understand what your bottom line number is, which then you'll allocate in 4 quarterly payments. But I want to go back and touch what are some of the income items, because there's an equation here that I really want my listeners to know about. So income, taxable income, is considered anything earned, but if you have earned income and you're self-employed, that earned income is decreased by your deductions. So with that being said, I want to spit out some gems. Those gems are going to be, hey, you know what? I made 40,000 in my regular W-2 job, but in my consulting gig, I made 30,000. Of that 30,000, I expense out 15,000 with a profit of 15 to carry over to my 1040 to take it on over with my 40,000 from my W-2. You see how the deductions now have decreased, right? So now it's saying that. So here we go. We're going to journey again. So we're going to go from 40,000 plus 15,000 from my side hustle gives me 55K. But I have an awesome spouse and myself, and we both get what's called a standard deduction. That standard deduction then decreases what my adjusted gross income will be. So let's say I have 55K. Uncle Sam is going to give me a standard deduction of 28,000. You subtract that, and that gives us our gross income, which then puts us in a tax bracket. That tax bracket is where the IRS has a publication that allocates ranges of income and has in that chart, not only are the ranges of income, but then it has the percentages. You can easily know and project your tax for tax planning. You can utilize that chart, and there are multiple calculators out there that can assist you with this to facilitate tax planning. So the unknown can be predictable, and the predictable is that's why you're chiming in with me, and we're going to keep this going. So staying proactive keeps you with less stress. Less stress keeps you aligned with your goals. So we're going to go into number two. Number two is record keeping best practices, right? So it doesn't matter if you're a business owner or you're an individual. Record keeping is vital for your financial health. What does that mean? I'm an individual. I want to purchase a home. I'm tired of renting. What does that mean? I need to set up a budget. But from that budget, how do I get the elements or items, line items to put in my budget if I'm not tracking, if I'm not doing any type of record keeping? Now let's take it to the other side. I'm a business owner. I use Square. Square is awesome. It picks up my income. I use my debit card, link it to my subscriptions, and that's how I pay myself. Not healthy. Not good record keeping. So how do we fix that? Well, that's what we're going to cover next. So we're going to keep good records by making tax filing easier, right? What you're going to do is you're going to start tracking your business financial health and individual health by date. How can you do that? Utilize simple available resources right on your phone. You have, if you are on an Android, you have great tools in there. If you're an iPhone lover, you have awesome tools in there. So for me, I'm a Google Workspace lover. I utilize spreadsheets, Google Sheets, and if worst case scenario, if I'm on the go, I'm gonna use one of my tools within my workspace. Do the same. What does that mean? Well, guess what? Day one or week one of January, I'm going to put one tab of my spreadsheet. And in that tab, every time I go and I use my debit card, I'm going to say, you know what? Let me go ahead and log this. But let me take a quick picture using my phone and then allocate 30 minutes at the end of the week by utilizing this process and now identifying what was personal, what was business. You have your own tracking mechanism. You don't have to subscribe to an accounting software, which I do highly recommend if you're a business owner. Accounting software can save you so much from headaches. But if you're an individual and just trying to see where you're at and where your money is going, use the resources that you already have built into your phone, your iPad, your laptop, or worst case scenario, if you're a person that likes to touch and still love to scribe, take that manual little notebook and walk around that black journal, that black book. Make notes of it. Then with doing that, you're going to keep receipts for major expenses like equipment, your travel, your meals. And ultimately, sometimes you get these receipts digitally. So, what it allows you to do is organize them by category and date with the method of either weekly, daily, monthly, whatever, wherever you can allocate time in your busy day to make sure that you're recapping and making this process work for you. The only way it works for you is the amount of energy you put into it, and place it as a goal of this year to do good tax planning or financial planning, or achieve your goal of buying a new car, or achieve your goal of buying a new home. It only starts with you, your commitment, and how willing you are to define what financial health looks like for you. Now, we're going to go ahead and say, hey, I'm ready to file my taxes. I'm prepared. And guess what? An audit can't win me because I have every basis of my documentation or my informational tax return located in either my spreadsheet, my digital receipts, and you have put in so much work into keeping that updated that you're stress free. One less thing that you have to worry about, a peace of mind. And then thirdly, importance of business deductions. So I'm going to change into my serious mode right here, although I'm mostly serious all the time. But let's talk about business deductions. So business deduction is a very important thing, especially for us who are in self-employed, independent contractors, freelancers, whichever you prefer. It's very important that you know how to use deductions to lower your tax income. And that can mean so many things. But I'm going to just call out a few common ones, just because I think these are the ones that always are missed by the tunnel vision that we have of just getting the return file. But these common ones are the big ticket number ones that can help you decrease that tax liability. And some of those include your home office, your business equipment, and your travel expenses. I'm going to touch on home office. I believe in what's called magic numbers. I like to make numbers fun because that's the thing that I love the most. But loving the most, I'd like to communicate it to my um, those who I'm giving or sharing my knowledge to in a more fun and practical method. So for home office, I have a virtual operation. My home has 3,299 square feet, not literally, but coming there soon. And then IRS allows me to deduct up to 300 square feet of that 3,299 home that I mortgage every month and pay a mortgage. And on an annual, I pay 24,000 for that home. I get to deduct 300 square feet of that 24,000 every month because that's where I'm working. That's a major lifesaver, right? And that's just one of the things. So let's talk about equipment. I have a business vehicle that I've leased. That vehicle cost me about 600 just for the lease a month. And then I also have to pay full coverage, which takes me approximately 4,000 a year. All of that is written off at 100%. The key item here is that it has to be in a business name. It cannot be registered to an individual because we have to do due diligence. If we say we are, that's who we are. If I'm Divergent Accounting Solutions, I use my vehicle for Divergent Accounting Solutions. Now, if you have a personal vehicle, however, that you're using for both business and personal, then we can say we're not going to use a business lease, but we're going to use what's called the mileage deduction. So, mileage deduction varies year to year, determined by the Office of Personnel, but it allows us to use a percentage, a cost percentage of what we can use for a mile that we use for business. How do we do that? So you have to use multiple, there are multiple apps out there where you can track your mileage. And it actually is so intuitive that once you turn on your app, your phone, and you turn on your phone actually is already triggered like, is this a business trip? Can you imagine the level of modernization and technology we're going to, that your phone, right, or your vehicle can indicate, hey, I am about to leave. Is this a mileage trip? Is this a business trip? Well, guess what? That's perfect. But now, what do you do with that? You take that over to your tax return preparation documents that you're recapping every month or every week, and you document how many miles you have logged in that app, or if it's in a spreadsheet, or if it's in a notes in your phone, whatever method you choose to use. You cannot deduct the cost of your personal car notes, but you can deduct the amount of mileage that you've used for personal. So I've given you two so far, right? We've covered one, your home office, two, your mileage. Let's talk about travel. So a lot of us have a lot of travel requirements, either for conferences, for to meet clients. We have so many different types of travel that we don't capture because we think it's a hassle. Well, that hassle doesn't have to exist if we're recapping it or capturing our expenses weekly, monthly on that spreadsheet, or in your accounting system if that's what you prefer. For a home office, make sure the space is exclusively used for business. Document your expenses like rent, utilities, or internet, and calculate the percentage you use of space for work. And then when traveling for business, make sure you save receipts for flights, lodgings, and meals. These deductions can add up and they can actually save you quite a lot. And now, this brings us to the sad end, but still there's a continuation. We will have a continued set of series, more industry specific, and we're going to dive into the complete forms and provide you scenarios that we can work through together. So what we're going to do now is I'm going to go ahead and close out our series, tax planning, with saying year-end planning doesn't have to be overwhelming. Tax preparation doesn't have to be overwhelming. Pay your quarterly estimated taxes if you fall in that category. Identify if you fall in that category. Keep organized records. And then take full advantage of maximizing deductions. Regardless if it takes time from you to keep track of it, it benefits you in the final outcome. And don't leave money on the table. I would reiterate this so importantly. Those deductions do add up, and you don't want to leave that money on the table because that's your hard earned money, your hard earned right as a US taxpayer that you want to take advantage of. If you found that these tips are helpful and you want to find out more information or follow our new upcoming series, please don't forget to seek additional help from a tax preparer, or you can visit my website, Ask Yara, or follow me or message me on Just Ask Yara on both Instagram and Facebook, and I'll be glad to share my insight and knowledge with you. And lastly, do visit my website to download a free white paper on tax preparation basics and subscribe to our email list so that whenever there's new free data out there that I can share it with you. Because remember, together we're accountability partners, and your accountability is showing up and listening in. My accountability responsibility is to continue giving you that insight. Thank you for chiming in and have a great day. Talk to you soon.